Canada's economy is shrinking. According to Statistics Canada, real GDP fell 0.4% in the second quarter of 2025, which would give us an annualized decline of 1.6%. From my perspective, this puts Canada firmly in the first quarter of a recession. I can't see a version of the Canadian economy in which we see GDP growth in Q3. And so we will likely, or already have likely, once we get the Q3 data, 2 consecutive quarters of falling GDP, which is your technical definition of a recession. Now, I've talked a lot on this channel about how we've been in a per capita recession for a long time. I was actually, fortunately or unfortunately, the person who coined the term me-cession, which is a individual recession. Canadian individuals like you and I, me, are in recession and have been in recession basically since 2022, when GDP per capita started declining, and has progressively been declining ever since then. So even though real GDP was growing, it was growing because of a lot of government spending and a lot of population growth, which meant more people, which meant less economy or money on a per person basis. So GDP per capita has been falling. But now we've gotten to the point where government spending is coming off, population growth is coming off, and so we finally hit the end of the road that we've been kicking the can down. You've exhausted all policy options to stimulate growth in the Canadian economy, and now you're dealt with just a real recession. And this brings us to GDP, not GDP per capita. GDP fell 0.4% in Q2, the first contraction of the year. The biggest hit came from exports, which dropped 7.5%. Obviously, U.S. tariffs hammered our auto sector, with passenger car and light truck exports down 24.7%. Machinery exports fell 18.5%, and even travel services were down double digits. But it wasn't just an export story. Imports, which you can see in the chart here, also slipped 1.3%, thanks in part to Canada's counter tariffs. Business investment fell 60 basis points, with machinery and equipment collapsing 9.5%, one of the steepest drops since 2016 outside of the pandemic. The one boost that we saw was from inventories. Businesses stockpiled over 30 billion worth of goods, which a lot of which was businesses buying stuff that they were worried was going to become subject to tariffs. So they start stockpiling stuff so they don't have to pay the heightened cost in the future. And this softened the overall GDP decline a little bit. Household spending also surprised a little bit to the upside, up 1.1% compared to just 10 basis points last quarter. And housing also ticked up. Residential investment rose by 1.5%, led by this 3.7% growth in new construction. You can see on the chart here, especially in rental apartment construction, which I've talked a lot about on this channel. I would encourage you to go back and watch any of my other videos about rental construction, because there's a huge wave of rental supply coming that's going to impact the housing market substantially. Resale activity, the red bar here, recovered slightly, with ownership transfer costs, which is basically your realtor commissions, lawyer fees, etc., up 1% after a steep drop earlier this year. Really easy for that to be growing from a low base. Renovations continued to slip 1.1%. As you can see, the light blue bars for much of the last 2 years here is your renovations. Renovation has been falling in most quarters since 2022. Canadian homeowners just have run out of money. They've run out of debt to be able to pull from their houses to spend on improving their house. And so we're seeing less and less expenditure on home renovations, save for a couple of small increases in 3 quarters in the last couple of years. But here's the bigger problem, and I've talked about this quite a bit on the channel. Employment and wage growth are really the final straw for the housing market. Incomes are weakening. Employee compensation rose just 0.2%, the slowest pace since 2016, according to StatCan, excluding the pandemic, obviously. Wages fell in finance, real estate, and utilities, even as construction and mining saw modest gains in their wage growth. The household saving rate also fell to 5%, down from 6%. So disposable income barely budged, up just 30 basis points, while consumption rose 1.2%. In other words, Canadians are spending more, saving less, and earning less money. On the government side, revenues fell 4.2%, partly due to Ottawa scrapping the federal carbon tax, but spending rose nearly 2%, while payouts for legal settlements, EI, and even a bailout for Canada Post increased expenses. This means more federal borrowing. In regards to the EI portion, a friend of mine, Ben Rabideau, recently put out this chart on Twitter that showed employment insurance claims basically skyrocketing. Corporate profits also declined, with weaker oil and gas output dragging down the energy sector. So what does this all mean? Canada's economy is clearly losing steam. Exports are down because of US tariffs, businesses are pulling back on investment, wages are barely rising, and households are burning through their savings to keep on spending. Technically, as I mentioned at the beginning of the video, a recession is defined as 2 consecutive quarters of contraction. We're not there yet, technically. Q3 did just finish. We won't have the data for a while. We're just using Q2 data right now. But if Q3 comes in negative, which I can't see a situation in which it doesn't, like I would say Q2 is really just the beginning of a lot of this contraction from tariffs, trade war, layoffs. Canada will be in an official recession once we have that Q3 data. And with trade tensions rising, consumers stretched thin, and I'm hearing more and more about layoffs in the construction sector, especially from contraction in condominium and for sale construction. I just can't see a version of Canada's economy that grows in Q3, maybe even Q4 of this year. And so I would say that Canada is probably firmly in a recession, and we will have official data and a media news cycle reporting on that by the end of this year. But I'm curious to get your take. As always, I try my best to read and respond to all of the comments. So let me know what you think. Do you think Canada can dodge a recession? Or is this the start of something bigger? Are we already in a recession? Let me know what you think in the comments. And if you want to understand how this slowdown is impacting housing, real estate, and investment, don't forget to subscribe. I put out videos like this multiple times a week with anything and everything that touches the housing and real estate sectors in Canada. Thanks again for taking the time to watch this video. I really appreciate you taking the time out of your day to do that. And I'll see you again as soon as I can and as soon as I have something that's worth talking about.